What's up, all of you beautiful subscribers? Welcome back to the Chapple Show. So what we're going to be talking about today is when to sell a stock or other type of investment like real estate, things along those lines. So why this video is going to be funny to me is because if you guys have watched a lot of my other videos, investing videos, you guys know that when I invest in stuff, for the most part, I like to invest in the long term. So I like to invest in stuff and hold on to it as long as I can. I plan to invest in safe companies for 5-10 plus years and have that investment appreciate slowly over time. That's my investment strategy. But that doesn't mean that there isn't a good time to sell your investments. So that's what we're going to be covering today. Some good times to sell your investments. All right, let's talk about number one here. I'm going to call this one downhill. Downhill. That's a general term. What does that mean? So if you have good reasoning for your investment, if you think it is going to go downhill or is going downhill, it is not a terrible time to sell your investment. But make sure this is educated. I'm going to give you an example here. I'm going to give you an example. So this isn't, I think the stock is going to go down 7%. This is, I think the company has infrastructure problems, or my investment has infrastructure problems that I cannot repair, so the investment might go to zero. That's what I'm talking about downhill. So here's my example. Sears. Sears was a giga company. This was one of the biggest companies in the world just a few decades ago. Giant retailer, massive company in the United States, up until even 2007. It didn't have as much market share, but in 2007, its share price was $127 per share. Giant company, multi-billion-dollar company. Everyone still believed in it, but they had three key issues here. Three. So one of them, tons of debt. They had tons and tons of debt. And so that's not always a bad thing if you expect to grow and reinvest, which they were trying to do. But it means that if there were a downturn in terms of revenue or even profitability, or if there were a downturn in terms of amount of sales, that would really hurt the company. And that means that the company would have a tough time paying back that debt, meaning that the company would be less profitable. They have a tough time recovering it. They might go to zero. All right. So that's what happens when a company has a tons of debt. All right, so again, debt's usually only bad if the company has a downturn. So remember, they had tons of debt in 2007. What happened the next year? 2008, the recession. Again, GDP goes down 12% or so, a really bad number, 8%, 12%. People aren't buying from Sears as much, profitability goes down, everything goes down. Sears has a really, really bad time during 2008. It's tough for them to recover. Again, around that time, 2008, again, they kind of survived it. The stock was still doing okay. The company was kind of struggle along there. But remember what happened 2008, 2009, 2010, 2011? What took off? E-commerce, specifically Amazon. Amazon, eBay, actually eBay was kind of doing it, but they were kind of still doing okay. A bunch of e-commerce companies started coming about. People didn't need to go to retail stores as much. The giga stores like Sears. Sears was not online. Therefore, they had less customers. They had less revenue. So they had the recession followed by major competitors stealing their market share online. Right? Tons of debt. So this was just they were going downhill. They were going downhill. And so that happened around 2010 when the e-commerce started taking off. Now, what do you think Sears is worth? The stock price. So it was $127. In 2007, as of today, it's about 47 cents. And they're going bankrupt. Sears Canada went bankrupt. I think that the United States version of Sears might be going bankrupt. And ask your parents about this. Your parents, I bet the biggest company that they knew as maybe teenagers was Sears. A giga company. They had enough money to go and set up their own e-commerce, be the Amazon, but they didn't. And now they're bankrupt. So even if you were to sell at $87 or something, if you bought at $127 and you saw it going downhill, sell at $87, that's a decent time to sell because your investment doesn't go to zero. But then again, this isn't like just thinking a stock is going to go down. This is the only time to sell like this is if you know that there's giant infrastructure problems for the company. All right. So we're going to move on to number two here. Number two. You see a better opportunity, better investment opportunity. How do you spell opportunity? That's it, right? I haven't written on the whiteboard in so long. I forget how to spell stuff. You see a better investment opportunity. So again, for example, let's say what's a company that's been static for a little bit? I think Google stock's been kind of stagnant for the most part, but what's a stagnant company like BlackBerry, okay? BlackBerry, kind of a stagnant company. They've been doing pretty well over the past few months, but stagnant company, they're still a company. They don't sell phones as much anymore. but they've been kind of stagnant, right? Now let's say let's say you were invested in them, you invested in them when they were down in 2015, and the stock stayed kind of stagnant, but then you heard of Amazon Prime's numbers come out. Amazon announces Amazon Prime, there's a bunch more memberships. A good time to potentially sell your BlackBerry investment and invest in Amazon. I mean, that'd be a good time to sell. If you're selling your investment to find potentially better opportunity elsewhere, that could be a good time to sell. Now, however, a lot of people don't realize that the better investment isn't always a better investment. Usually it's just, hey, it's a new shiny thing I should jump on and try to make money from. But again, that's an opportunity. That's one of the good times to sell your investment is if you see a better investment out there. All right, number 3 is emergency. And this is something that I had to do once upon a time when I was in university and I had a bunch of money in stocks. I got sick and, I kept burning through my savings. And, a lot of medical care in Canada is free, but prescriptions at the time were not free for people under 25. Now they are. And so I had to pay for a lot of the stuff I needed to, live through kidney failure, which sucked. A lot of antibiotics, a lot of chronic stuff. I had to burn through a lot of different experimental medicines and all this stuff. I was trying everything. And so again, this could also be for just paying your bills, paying your medical bill, paying your bills, your electricity bills. There's kind of an order of stuff you should do. You should always take care of your housing, take care of your electricity, take care of your water bill. If you cannot pay those and you have a bunch of money in stocks, or a bunch of money in some other investment, try to liquidate that investment. Take care of yourself first. Take care of your home first. That is a good time to sell your investment. And a lot of people experience that. I mean, I did no regrets, even though I bought Apple for, I remember that. It was like $50 or something. How much was it? It was like $67 or something, $80 per share. I had a few other ones too. But again, I might not be alive if I didn't use it for emergency money. So I don't know, right? So it's just, again, if you have an emergency, again, just sell your stocks, sell your investments, move on. Number 4 is rapid price appreciation. So we're going to call this, we're going to call it bubble. How about bubble? So I saw this. And I made a video on Bitcoin recently, but that's probably the best example I could give here as an investment, even though Bitcoin I don't think should be viewed as an investment. But people were investing in Bitcoin and they were seeing rapid price appreciation. Rapid price appreciation. Now, if something appreciates in value that much over time, usually that's not a good sign. Unless it's due to unless there's some backing behind it. So for example, if there's one quarter where Amazon, I think this was years ago, when they had a quarter when they announced that they were making like way more money than expected. So the stock went up like 10%, 20%, it kept going up. There was some backing behind that rapid appreciation. But if it is something like Bitcoin, which is just going up for no reason, just because people believed in it, a good time to sell off would have been once you realize that people were investing in something with no backing. So rapid price appreciation or a bubble of some sort, if you sense something like that is coming, like I talked about 6 months before the Bitcoin bubble popped, that's a good time to sell your investment. If you sense that something is the appreciation is just way more than you expected, way more than it should be appreciating, that's a good time to sell. And this goes for things like real estate too. And maybe not real estate as much, actually, it applies to everything for the most part. Let's move on here to number 5. Number 5 is, you need capital. This is something that I had to do. So maybe you want to start a business, right? Like I did. I want to start Joisk, and you need some capital. And let's say you have, let's say you're just starting some random website business, a blog where you sell some clothing or something. You're going to need a few $1,000s for that, right? Let's say your bank account, you have $4,000, the kind of fringe enough to start the company, but in your stocks, you have $10,000 or some other investment, you have $10,000. I don't recommend putting your bank account to zero to start a business. Not a lot of the times. To zero, because then you maybe don't pay rent next month, maybe you get kicked out and you have no business. But that's a good time to sell. If you need capital to start a business, like I sold off a lot of my stock to start Joisk. That's what I had to do. But that's a good time to sell. is if you want to start a business and you're taking a risk. You're betting on yourself. You, instead of potentially getting a 6 to 7% return in the stock market, you're betting that $4,000 that you're going to put into your website or whatever, you're betting that $4,000 you're going to get a much higher ROI by putting it into a business, or maybe your ROI is 100% in the first year instead of 6. So that's an example. If you need capital to start a business, it depends on the business you're starting. It depends if you're ready to start a business. A lot of people probably shouldn't sell their stock to start a business because they're not too good at starting businesses. So again, just be aware of that. Let's move on to number 6. Number 6 is losing money. So this applies for something closer to real estate, in my opinion. If your investment is losing you money, even this applies to businesses, maybe not so much stocks, because unless you're buying on margin, but that's a different story. So, for example, let's say you buy a real estate property. Let's say it's okay. We're going to say $500,000. Let's say the revenue you bring in, you were expected was going to be $40,000 a year in revenue in rent. But the property's had a lot of problems. Maybe the property was really old, and so you have to put in a lot of work. You have to put in a lot. Maybe you can't rent it out either. There's a lot of problems. So maybe instead of making that $40,000 in revenue and maybe making a profit of somewhere like $20,000, $30,000, somewhere around there, something like that, from that revenue, maybe you actually lose money. Maybe you don't rent out the property for 6 months because it's in a bad neighborhood, and that property, and maybe some pipe breaks, maybe you lose money, and maybe it keeps happening. Maybe you cannot rent out the property. Maybe the neighborhood gets so bad that you cannot rent it out. That might be a good time to sell, cut your losses, move on. So that's a good time to sell, just cutting your losses if there's some irreversible thing, or maybe it's just costing you so much money over a few years. It's a good time to just cut your losses and move on. Move on to number 7 here. Number 7, this one is kind of a psychological one. This one is called losing sleep. This is when you're investing in the stock market, usually for the first time this happens. This happened to me a long time ago. If you're losing sleep, or if your investments are taking up too much of your brain space, then it might be a good time to just not invest, or just not invest in that asset. If you're thinking about your investment all the time and you're living or dying by going up or down 3% in the stock market, or you're thinking about, could something go wrong with this property, could something go wrong with whatever, then maybe don't invest in it. Because in just my own personal opinion, if you're living and dying just by your investment, something that shouldn't really impact your main source of income for the most part, or your main source of wealth. Maybe wealth may be a little bit different, but you shouldn't be losing sleep over it. If your stock goes down 5% and you lose 4 hours of sleep thinking about, oh my God, I lost this much money, then that's going to impact your happiness, your life, your work ethic, your productivity. It's going to impact if it keeps happening, it's going to impact you in the long run by decreasing essentially everything about your life. Productivity, happiness, everything. So that's a good time to sell, is if you're thinking about your investments all the time, thinking about losing sleep, and it's always on your mind, and you're at work and you can't concentrate because your stock went up 10%. You're like, oh my God, yay. And the next day it's down 12. Oh my God, no, right? That is a good time to sell your investment if you're losing sleep. And number 8 here. Number 8 is the investment has changed. So this is kind of similar to number 6, but I've seen this in real estate actually a lot. I saw it a lot a few years ago. So pretty much what would happen in something like real estate is when, let's say you invested in a property, it was worth $1 million. It was in a decent neighborhood. Let's take, for example, Detroit. Here's a good example, Detroit. You bought a house, $1 million, good neighborhood, and city's growing in the 50s, 60s, everything's booming. And then the car manufacturers and factories, maybe one of them decides to up and leave. All of a sudden, you have less people coming in, population is decreasing, the value of your property is decreasing, and then the neighborhood gets a little bit sketchy. Another car company leaves. The neighborhood gets a little bit more sketchy. Now there's a lot more crime. Again, the investment itself, you were investing in essentially a property which was in a growing city with good middle-class jobs. Now your investment has changed from that to you are now in a rundown abandoned area where you're renting to people that are low income, a lot of the times damage the property. Now your investment is completely different. It's not what you signed up for. So that is a good example of when to sell. Maybe it's time to sell and just move on. All right, so that is kind of the 8 things of a good time to sell your investment. What do you guys think? Is there anything I missed? Let me know in the comments down below. So if you haven't heard, I have a big vlog announcement. So I am going to be essentially trying to, I'm going to make a vlog about from essentially trying to build a business from the very start to essentially the time where I make my first few sales, and documenting everything in between to actually building a business from nothing to something. And I'm going to be trying to do one of those maybe every week, 2 weeks, 3 weeks, every month. So I'm going to start out with a t-shirt company, going from wholesale to building the logos, to putting them on a shirt, to advertising, to selling them, and all that stuff. I'm going to take you an entire process of building a company. And again, I just got fed up with people essentially just saying, oh, this is how I built the company. And you know, if you want to learn how to build a company, buy this course and buy this PDF, and it'll show you how to build a company. I don't know if anything like this has been done on YouTube from actually doing, I'm going to be doing this, hopefully a new business again every few weeks. So t-shirts, and then, you know, maybe we'll go to tech, maybe we'll go to electronics, maybe we'll go to hats, maybe we'll go to some tech stuff, maybe I'll do some, I don't know, I'll do something, right? I'll try to come up with something every few weeks to try to start a business from scratch, and usually build it through Joisk. So again, check out Joisk if you want to support this channel. We have very low prices for a lot of stuff like video games and books, lowest prices on the internet. So I'd like to thank you very much for watching. Remember, hit the subscribe and like button if you like this video. You're all very beautiful people. I'll see you guys in the next video.